All right, let's dive right in. Today, we're going to decode the Union budget for 2026-27. Now, I know it's a plan packed with huge numbers, new schemes, and some pretty major policy shifts. So our job is to break it all down and figure out what it really means for the economy and, of course, for you. So the whole thing is built around three core duties, or as the finance minister called them, Kartavyas. You can think of these as the guiding principles. First, keep the economic engine running strong. Second, help people achieve their dreams. And third, make sure everyone is part of the journey as India pushes towards its goal of becoming a Viksit Bharat, a developed nation, by 2047. Here's our game plan for today. We'll kick things off with the big economic blueprint. Then we'll get into the massive investments being made for the future. After that, we'll ask the most important question: what's in it for you? And we'll wrap up by looking at the key debates this budget has kicked up. Sound good? Let's go.
First up, the economic blueprint. These are the big headline numbers that really set the stage for everything else in the budget.
The first number you really need to know is this: 4.3%. That's the projected fiscal deficit. Now, what does that mean? Well, think of it like the gap between the government's total income and its total spending. By aiming to bring this number down, the government is basically saying, hey, we're focused on being disciplined with our money. It's like tightening the national belt to borrow less.
And here's the showstopper number: a whopping 12.2 lakh crore rupees in public capital expenditure, or capex. This isn't just everyday spending. This is the government investing in building stuff that lasts. We're talking new highways, modern ports, and huge power plants. This is a massive, massive bet on jump-starting future growth.
This chart just says it all, doesn't it? You can see that steep, steady climb in capital spending. That blue bar is the direct government investment, and when you add in the money given to states for their own projects, that's the yellow bar, you get to an effective capex of a staggering 17.1 lakh crore. This isn't a one-off thing. It's a sustained push that's really at the heart of the entire economic strategy. And to finish off the big picture, the outlook is pretty optimistic. The economy is expected to grow at a healthy clip, tax collections are looking really strong, and even with all that spending, the country's overall debt level is being kept in check. So the stage is set for what comes next. Okay, Section 2, building for the future. So where is all that massive capex we talked about actually going? Let's find out. One of the biggest announcements: 7 brand new high-speed rail corridors. Now, don't just think of these as faster trains. Think of them as economic arteries that are going to connect India's major financial, tech, and industrial hubs. The idea is to supercharge development all along these routes. It's about connecting the dots, literally.
But it's not just about getting from point A to point B. There's a huge push to make India a global manufacturing powerhouse, especially in some really high-tech, strategic areas. We're talking biopharma, those all-important semiconductors, and crucial rare earth minerals. And here's how they plan to do it. We've got the next phase of the India Semiconductor Mission. There's a 10,000 crore rupee scheme called Biopharma Shakti to really boost our own domestic production. Another 10,000 crores are going into a fund to help our small and medium businesses become global champions. And finally, special corridors will be set up just for mining and processing those rare earths. Okay, we've covered the big picture, the massive projects, but let's bring it back home. Section 3, what's in it for you? How does any of this actually affect the average person's wallet?
So there are some direct tax changes aimed at making life a little easier. For instance, you know that tax that gets collected upfront when you book an overseas tour package or send money abroad for education? That's been cut way down to just 2%. It basically means you're not paying as much tax upfront for those kinds of things.
But, and this is the big headline for most of us taxpayers, there are no changes to the income tax rates or the slabs this year. So while a few rules got tweaked here and there, the way your basic tax is calculated is staying exactly the same.
Now, for something really cool on the tech front, especially for the agriculture sector, the budget is rolling out Bharat Vistar. What is it? It's an AI-powered tool that speaks multiple languages and gives farmers customized advice based on data. The goal is to help them boost their crop yields and lower their risks. It's like having a super smart agronomist in your pocket.
There's also a serious focus on India's youth, or Yuva Shakti. Some key things here. A new girls' hostel is planned for every single district to help young women studying science, tech, engineering, and math. There's also a big push for the orange economy. That's the creative industry, think art, design, film, and new skill programs for people with disabilities. And that brings us to our final section, the key debates and what lies ahead. This is where we look at some of the most talked about and, frankly, controversial changes from this budget.
Okay, this is a big one. The old Rural Employment Guarantee Act, MGNREGA, is being replaced. Now, the new act actually increases the guaranteed workdays from 100 to 125. But here's the catch, the real game changer, the funding. It's shifting from being 100% funded by the central government to a 60-40 split, meaning the states now have to pick up a big chunk of the bill.
On budget day, the stock market got a pretty nasty surprise. The reason? A big, unexpected hike in something called the Securities Transactions Tax, or STT. That's a tiny tax you pay on stock market trades. This hike specifically hit futures and options trading, and it caused a lot of jitters. And this table really shows you why it was such a big deal. Just look at these numbers. The tax on futures trading more than doubled. And on options trading, it went up by a staggering 15 times. The bottom line is a very popular way of trading just got a whole lot more expensive overnight.
So, when you zoom out and look at everything together, the core strategy of this budget becomes crystal clear. It's all about prioritizing long-term growth by pouring money into infrastructure, rather than focusing on short-term relief or quick handouts. It's a bet on building a much stronger economic foundation for the future. And that brings us to the final, really big question we have to ask. The budget has made a very clear choice: bet on long-term infrastructure over immediate relief. The question is this the right path for building a developed India?
So, what do you think about that big bet? Is it the right move for India right now? We would absolutely love to hear your thoughts on Budget 2026, so drop them in the comments below. And hey, if you found this breakdown useful, you know the drill. Don't forget to like, share, and subscribe for more. Thanks for watching.